Alright, we are live now. Just a second. Alright, cool. What's happening to the market? The same thing is happening which we've been discussing for the past 2 weeks. To be cautious about. That is what is happening to the market. When things are extended, people are buying these all-time high breakouts even when the previous demand zone is way below, maybe this one. These things will tend to happen in the market. Alright. And it's not something new, to be honest. You see something like this as well. Broke out and came back all the way to the demand zone, then started to go up. Alright. So these kinds of things will happen when the market is extended. You want to focus on stocks which are not falling from some demand. So when the market turns around, those demand zones will lead to some kind of a big move. Alright. So maybe let's see. Alright. See something like this, right? This is not a recommendation, don't buy it. But see, this demand zone is holding. So this can go up. I'm not saying it will go up immediately if the market, even if the market continues to fall, alright? What can happen is, right. So what can happen from here on is, suppose the market drops another 10%, so this might break the demand zone. So when the market is downtrending, you want to take stocks which are not falling, but you want to take them with small quantity. You don't want to buy big sizes. And someone was asking about NIT Limited on Thursday as well. So you see, this is why you don't buy here, right? This is why you don't buy here. Hopefully it's clear now. Just one day and this thing fell by 16%. The index is down by 3%. This is down by 16%, even though it's a very strong structure. So these little nuances, you will have to observe them over time. If you buy this here, if you buy this here, then you'll have to sit through all this, and you don't even know if this demand zone is going to hold or not. All right, see something like this as well. This kind of stuff will happen in the market. So this is why you shouldn't buy structures which are falling like this. All right, give me 1 second. I'll just update on my Instagram as well so that people can join in. All right. All right, give me 1 second. All right, not exactly a good picture, but yeah. All right, so back to your questions. Trident for long term. All right, let's check out Trident for long term. You can put your questions in the chat. So Trident, we discussed this is the demand zone. Before this, do not buy. Whenever things are far from the 50 EMA, don't buy them. All right. Whenever you see things are far from the 50 EMA, do not buy those stocks. They are extended, and just don't buy them. See something like this as well. A lot of people are stuck. It's already down like 50%, 40% from the highs. From 290, this come down to 180. So you don't want to get in these kind of structures which are going up like this. It's all right, miss this, but once you're stuck in this, then there's no getting out, and it hasn't even given a chance to get out yet. All right. So you always want to trade around the 50 EMA, and you don't want to buy far from it. So nothing in Trident right now. R power actually, it's getting kind of better, but R power we've discussed. I think all these stocks we've discussed, they are all extended. So these things will come down to these areas, and then you can look for a buying opportunity there. All right. Maharashtra seamless. All right. Yeah. How do you understand when to add more quantity? You just add more quantity when it comes down to this demand. All right. Promoters are buying this. This won't go down a lot. You see, the intensity of the fall is also not that much here. The recoveries are sharp. Uh, is it at a 5% circuit? I don't think it's at a 5% circuit, right? No, it's not. All right. Yeah. So you can buy around the demand zones. You don't have to wait for any kind of structural change in the stock on the lower time frame, because the promoters are getting in. So you can take that kind of risk here. So Bank Nifty, let's discuss Nifty and Bank Nifty. First of all, let's discuss Nifty. So Nifty, the flow was on the downside. The daily demand, this one was taken out. The next one is here, which is coming very fast. All right. So the flow was already on the downside. You just have to look for the last base where the action was there. So this was the last base, and any supply where it gives an entry, you chase the momentum after that. So that was my trade in Nifty. And similarly to hedge Nifty, I took a long in Bank Nifty. So what was the logic behind this? See, Bank Nifty was underperforming Nifty. It wasn't falling with Nifty. Nifty IT was the one which was very, very weak, right? So Bank Nifty had a chance of going up if Nifty had to bounce back. All right. So this was a 5-minute supply. Of course, the flow in Bank Nifty is also bearish. I'm not saying that Bank Nifty is bullish. I'm just looking for a very low entry into some kind of a pullback, which might become an uptrend. All right. I'm not saying that I knew that it would go up from here. This is a hedge for my Nifty short, because Nifty is already, suppose Nifty is somewhere here and Bank Nifty isn't falling below the day low. So Bank Nifty might spike up and ruin this trade as well, right? So I don't want that to happen. So that is why you take this hedge in Bank Nifty. So this was the 5-minute demand area, right? This area basically, the around the range low. And this was a 1-minute supply. So when the 1-minute supply started to get taken out here, that is when I took it, and the target was the 5-minute supply. So it was a little hedge, just that, nothing else. All right. So now I've exited this as well, but I think it might go down more. So when you're trading Nifty, you want to focus on two indices. Don't just don't just look at Nifty, the chart of Nifty, or the chart of Bank Nifty. All right. You want to look at Nifty IT as well, and Nifty Metal, maybe Nifty Metal as well. All right. Nifty IT mostly, because when Nifty IT is moving like this, Nifty IT has the power to move Nifty on its own. All right. So when you're looking at Nifty IT, suppose Nifty IT has fallen this much, right? Nifty IT has fallen this much. So now what will happen is there has to be a bounce at some point. Nifty IT cannot go down 15% in a day, right? It might happen if there are results or something, but it won't go down 15% in a day like this, right? So when Nifty IT you see starts going sideways, right? So there's a chance it bounces back to this 50 EMA line again. All right. Nifty is also way below the 50 EMA line. So now if you're going and shorting Bank Nifty at a supply area, that is a bad trade. All right. If you're going and shorting Bank Nifty at a supply, that is a bad trade, because the ones which had to fall have fallen. So now there's a time that it's time for a bounce in the index. Now Nifty IT might, if it starts bouncing from here. So let's see the 1-minute chart, right? So suppose this supply gets taken out, right? This was the supply which led to the new low. Suppose this supply gets taken out, which it is trying to take out, then there will be a quick bounce till these levels, maybe even this level, depending on where the next pullback. Yeah, maybe something till here we'll get a quick bounce. So this is not the time to short the index if you see a new breakdown in the intraday chart. All right, this is a time to play longs on stronger stocks. So suppose if I pick out some stronger stock, let's see, it's difficult to find one. Yeah, suppose I'm seeing Maruti. So what did I discuss in intraday when I was talking about trading intraday? You want to see the last base, and then you want to see the zone inside the last base. So Maruti is reacting from there, and it's taken out this supply as well. So any kind of dip now here should be bought in Maruti. All right. So this is not actually the time to short the index. This is the time to take longs in a few stocks, or maybe one stock. So so be very careful when you're trading intraday. Be very, very careful with what you're doing, because you have to, and mostly try to trade intraday on the short side. So why am I saying try to trade intraday on the short side is, suppose Nifty is extended on the higher side, right, and Nifty starts to drop, then the stocks which are extended will drop, and the stocks which are not extended will also tend to drop. All right, so almost everything will tend to drop. 3 out of 4 stocks will tend to drop with Nifty. But suppose Nifty is extended on the downside and Nifty spikes up, then these supplies won't get taken out in a lot of stocks. So you're playing where the volatility is more. You're playing when Nifty goes down, it goes down in a spike. All right, when Nifty goes up, it goes up slowly. So now when you're trying to trade intraday, your bias should be, you should be always trying to short stocks, because if Nifty goes in your direction, your stock will mostly start dumping down. All right, and Nifty, there has to be a retracement in Nifty every single day, right? So suppose Nifty is extended here and your stock is doing, and your stock is bearish, then in all of these falls, your stock will fall to the next demand very easily. So so all these, see, even though it's stronger than Nifty today, it easily came down to this previous demand on the 5 minutes. So it's all about knowing which zones are getting taken out and which zones are not getting taken out. So now you see this zone is not getting taken out, trading far from it. So maybe the bias here is changing for Airtel, right? If the market stays stable, we might see some kind of spike here. But whenever you're trying to trade the index, you should always aim to trade on the short side. Do not when you're trying to trade intraday, sorry, not the index, you should always aim to trade on the short side, because there the margin of safety is much more. All right, because demand zones get broken like this. They'll just get broken very easily. Supplies, it takes some time. It takes some time to take out supplies. Even when Nifty is going up, you will be mostly safe. So pick out a few liquid stocks, something like let's say something like all these Adani Ports, Adani Enterprises, UPL, Vedanta, all metal stocks are liquid. India Bull Housing is very liquid, and try to short these at previous supplies. You see, look at this. There is no sign of recovery at all, right? You just trail it through the supplies. So these are just falling in a straight line, gapping down. Look at PVR as well, right? So this is the good short in PVR. You see, this was the base which led to the last high. This demand tested multiple times, then got broken, and now this supply is a short. So all these shorting opportunities you should take. Look at this. There is absolutely no recovery in this stock. So from the lows, it's very hard to recover without a build up. All right, but from the highs, it's very easy to fall without a build up. So always try to look for shorts in intraday, even when the index is bullish, because everything is not bullish. All right, so all right, JK paper for short. All right, sorry for the missed doubts. I just got in the flow. So it depends on where you shorted it. If you shorted it here, still good. Which I see, there is actually no short until this demand got taken out. So now if it pulls back, maybe now you can short it if it shows some kind of rejection from this supply. But until this entire base is taken out, you shorted the absolute, you shorted the most bullish stock in the index right now. So don't do this. All right, you'll find much poorer structures. Look at this. All right, look at this. What kind of chart is this, right? You want to short these. So a lot of people are buying this breakout as well. And I think I talked about, if you're entering here, you should keep your stop below this level, because once this is absorbed, I think it was in some other stock, I don't really remember. Yeah. So once it is absorbed, this kind of stuff will happen in the market, and all the Zomatos and the Paytms. So Zomato as well. Let's discuss the chart of Zomato as well, because I think a lot of people are holding Zomato. So Zomato, why did Zomato fall? How can you actually preempt these falls? And these are very important. This will be very important. So kindly pay attention. How can you actually preempt the fall in Zomato? So you see, which was the demand which led to this high? This was the base, right? Now again it came down. Sorry. Again it came down, went up. Which was the demand which led to this high? It was this demand. So sorry about that. All right. So which was the demand which led to this new high? It was this demand, which is reacting from this previous demand zone. All right. So now when you see that these demand zones are getting taken out like this, looking at some rollover. Basically, what is a rollover? First of all, don't just draw these curves. What is happening here is the 1 hour structure is changing from this to this. That is how the top gets made. There are no random curves on the chart. All right. So when the 1 hour structure gets broken here, that is how the top gets made. So anyone who's thinking that we're just drawing curves on the chart, that's not true. It's happening on the 1 hour chart. All right. So you have to see where the next 1 hour demand is for a sufficient reaction, right? So this gets broken. Now this is your supply right here. Now this supply is sustaining here, right? Now look at the pullback. So this demand zone has gotten tested multiple times, all right, and it couldn't break out through this previous supply. So when it starts falling, this is your sign that something bad might happen in the stock. Now, will it fall 15%? Will it fall 100%? No one knows, all right, but it will fall, and that is very, very evident here with the structure of this chart. So you don't want to take bounces when the demand zone is tested once, twice, thrice, 3 or 4 times. All right, and when it starts falling, maybe that is the time when the demand zone breaks. So these are very simple, and in Nika as well, these are very simple things which can save you a lot of money and a lot of time as well, like a lot of time. So see in Nika what is happening, which was the demand zone which made the last high. This was the demand which made the last high, but broken here. Now your immediate reference becomes the previous supply, which is this zone. All right, this candle right here becomes your immediate reference. So until this is taken out, there is no long here. There is no question of a long trade here. All right. So kindly keep these points in mind if you don't want to get stuck in stocks like this. All right. All right. So added Davis long term at 3920. Davis, actually there was a buying. So I picked up this one because this is also on my watch. I actually bought something right here with a limit order. So this was marked previously on my chart. You see again this demand is getting absorbed here. Maybe this one, right? This entire base. So when this was happening, there was a very nice buy point inside this base. All right. So I've been discussing these. I posted an Instagram post on this as well with one. I probably named it 1. This was 2. And this was 3, if I remember correctly. So this is the buying point, all right? Not anywhere here. All these are extended areas, and definitely for long term. So you buy here, and then you get an immediate reaction on the upside. I think you wanted to buy here as well, but you couldn't get in the wick. I actually had a little limit order placed here itself. So this was also on my watch. So good one. RCF. All right, let's take out RCF. So RCF, all right, I'll just remove all this. But yeah, this was extended again. See, they're bullish till the last day, then suddenly down 10%. All right, they sustain all these days, and then suddenly it's down 10% from the middle of nowhere. So this is what I've been warning you against. All right, I've been alerting you against, basically, because these kinds of structures won't sustain if the market keeps falling. You have to be very, very careful with what you're taking. All right. All right. ICICI Bank short in options. What you can do is you can actually take a bullish trade in ICICI Bank. But again, on the daily, it's extended. See, if you want to measure the entire next move which is about to come, which is difficult to say at this point if it will be bullish or bearish. But since banks are much stronger than Nifty, I'm assuming there is some buying going on in banks. What you want to do here is you want to mark the previous base, which is somewhere here, and then you want to take this range low. So this range low must be coming from somewhere, which is this base right here, right? This base. So now you want to design a strategy from here. So take this supply. So you short the calls here. Maybe you can take this high as well if you get enough premium, and then you short the puts here, somewhere here, 780, somewhere here, and whatever side you expect the breakdown to happen. Suppose it starts rolling over here, and you expect some kind of breakdown to happen here. Then you square off this point, and then you shift this to here. All right. Of course, if it's a fake out, then you can adjust back up, right? So you might lose a little bit in adjustment, but once the move starts, you will be able to catch the entire premium. So this is one thing which you can do if you're not sure about the direction. But what I would suggest is if you're selling, suppose both sides, then suppose sell 1:2, something like that. All right. So if you're selling 2 here, you sell 1 here, because your bias should be bullish here, because this is much stronger than Nifty. All right. So there is I mean, I don't think it's about to go down, but if you think it's about to go down, then you can take the trade accordingly. It's basically rejecting from this supply only, which I marked. All right. So these bases don't matter, because the last low is here. It was made by this base. So all these supply zones, they don't matter. This is the supply which matters, and this is where it's reacting from. And this is where they'll tell you that it's liquidity. There is no liquidity here, right? No one is coming for 10 crores. All right. So I have worked in a prop trading firm, and I have asked them why do you not trade NSE? They said it's not liquid enough. A minor prop trading firm. So if you think that big banks are operating here for short term or intraday, that's not true, right? So the point is, this is where the selling started. This is where the positions were built. So it's so this will be defended more. There is no new low here, so it tells us that there is no sufficient selling going on, and demand is still present. All right. Lodha Macro Tech Developers. Yeah. So Lodha Macro Tech Developers, you see this clearly says that the demand is coming from this level. All right. So yeah. So be a bit careful here. If you're already in it, I would suggest you trail it below some hourly base, which is somewhere here. Trail it below this level, which is 1160 or 1170. All right, so let's see. We talked about Maruti. Let's see what Maruti is doing. All right, still in a bullish structure, pulling back to demand. So if market sets up, you can look at this for longs. All right, Birla Corp. Yeah, let's talk about Birla Corp as well, because I had also taken this trade. So Birla Corp, what is going on? Birla Corp, my entry was somewhere here, which was extended. I think somewhere here. I don't really remember. And then my exit was as soon as this candle formed. That was my exit. Why did I exit here? Because see, first of all, I knew that my entry is extended, so my position is small, because the actual demand is coming from these areas, right? Somewhere here. This is just a continuation demand on the upside. So what am I seeing here is I'm seeing this supply, all right, and there is a fresh supply which gets formed when the retracement happens. So when the first candle came down, this was the retracement supply. So now when this pullback happens, I'm expecting it to sustain. When it starts to roll over and fall like this is where I'm exiting. All right. So this is where you exit your Birla Corp trade, on this candle itself. So you'll be saved from days like this. And I'm not saying that all stocks will fall like this when this structure plays out. Some might just react from the demand and take out the supply again. All right. But it's a good safety measure when the small cap index is down by 4%. And this is probably the biggest candle in the last few months, right? This is the biggest candle in the last few months. These are 2%, 3% candles. This was down 5% at one point, I think. Yeah, but mostly this is the biggest candle which is shaping up in the last few months. So be a bit careful there. All right. All right, CCL. All right, Himalaya Chemical. Yeah. So once this happens, you exit. So I'm not sure what I talked about in this chart. Yeah. So probably I suggested to buy somewhere here, but now you should be exiting this. Don't hold this. All these are extended stocks. You see, what will happen is when the stock pulls back to a low in a sharp manner, it will react in a V-shaped manner. All right. So suppose this is a structure and there's a correction and this happens. So when there's a lower low which is being formed, or there's a retest of the previous low, this is the proper area of demand. Anything above it is continuation demand. So you should take it with a small size. Secondly, any sign of turnaround like this, you should be exiting immediately. All right, because the actual demand is coming from inside this base, which is here. So there is nothing stopping the stock from doing something like this. All right, Dish TV, nothing. Again, we are expecting this supply to be tested. It never got tested. Now it's coming back to this area of demand. Nothing else. So I'm assuming all these stocks you guys are holding, right? So I've been warning you against these since so many days, and now everything is down 10%. You should. I mean, you'll be stuck with this if you don't exit. Latent view again. This supply I think we discussed about. So probably there's some arrow at this hourly, but see, the hourly structure never got played out. No supply got taken out on the hourly. So I'm not really sure why there's an entry in latent view, but there's nothing here, to be honest. Inox Wind. Inox Wind, again, this is the area of demand right here, this one. All right, this is the area of demand which you want to watch out for, not here. Everything is down 7%. Hindustan Motors. Nothing here, nothing in Hindustan Motors. Ignore this. It's not even that liquid. Don't ask about the liquid stocks. Confidence Petrol, again, look at this. We talked about this supply, so it got taken out. I mean, slightly. Now these demand zones, when the stock comes, you can take a buy here. Gale, all right. Nothing here. It's just reacting from this supply base. So this was the base which led to all this action on the downside. All right. So it's just reacting from there. Nothing else. All right. Nifty in 5 minute. All right. So we talked about some bit of up move from here. Let's see. All right. So Nifty IT is still not trying to break any supply. So see, don't short here, but there is no long as well, because the next up move which happens in Nifty, it will happen above this supply. All right. So until then, the flow is still on the downside. So let's see here. Yeah, so until this gets taken out, maybe even this actually. So there is a lot of action which is left in Nifty. It won't react up and down. All right. So also one thing which I wanted to discuss was how do you actually manage this day, because these days are easy. You even a person who is shorting the breakdown is making money. All right. But how do you actually manage these days? So whenever you see that Nifty is gapping down, all right, whenever you see that Nifty is gapping down like this and pulling back up, it will create a very strong day low demand. All right, it will create a very strong day low demand zone, and this is what you need to use as your anchor zone for any kind of trade, because the supply is very far, right? So you cannot expect it to just break through. I mean, it can of course break through, but it won't just break through without forming some kind of a base here if it gaps down big. All right, so if it gaps down big, it's always the day low demand which is your point of interest, right? So yeah, so until this is not taken out, which it got taken out here, your bias always should be on the long side whenever Nifty is gapping down like this, right? All right, so Bank Nifty is still much stronger than Nifty. IT, nothing. All right, Sun TV, Mahindra Logistics turning around like the stock. Yeah, that's all right. Let's check it out. Mahindra Logistics, yeah. So it was moving up in this kind of manner. So this stuff can happen. It's approaching demand zone, earnings coming up. All right. So let's see. The demand is actually here, right? This is the last high. So the actual demand is coming from here. So even this right here is extended. All right. So I'll probably avoid this one now. HAL again. See, this is not falling, but you don't want to take this. Don't do that mistake. Tomorrow it might just gap down, right? Don't do this mistake. I've just discussed about this. If it starts taking out this low, then it's bearish. All right, Fortis Healthcare. So same healthcare stocks. Fortis have been telling you not to buy here since forever because the demand is around the lows. So now wait for it to set up. Right, wait for it to set up. Also, don't wait for the demand to be taken out in most cases if you see the market is falling, because see, it's basically a distribution type structure. If it's see, how does a distribution play out? All right, you will usually see that there are very V-shaped reversals. There's a lot of V-shaped reversals from the top. Talking about the hourly chart, right? A lot of V-shaped reversals on the top, and there is a fall and a quick retest, and then you will see VIX here as well. So this basically indicates that the structure is weakening, and then it's ready for a down move, which is exactly what happened here, and it did not take out the previous supply as well. All right. So you see here is the wick. This rejection, that is what indicates that this thing can fall. All right. So yeah. So I mean, you can make note of this. All right, let's see. Bombay dying. SIS. All right, let's see. SIS is still going up. I mean, it's good that it's going up, but I wouldn't suggest. I mean, somebody. You entering. All right. I think you entered from somewhere 420. I think. Yeah, or somewhere here. I think. So that's a good one. Yeah. But probably book something now. It went up in a straight line. Awas financials is ready? Definitely not. It might go up if the market stabilizes, but my area of I mean, this is where I will take it. All right. This is where I'll take it. Nifty. So guys, don't, if it's suppose it's not taking out this previous supply, right? So don't short a new breakdown here. Never do that. If it continues to fall like this, let it go. This is not the day for intraday. All right. So let's see. So still not falling that much. So suppose you marked your zone in Maruti, right? This is your demand zone in Maruti, where you want to take a long trade. So how do you actually take it? You go to the 1 minute chart. All right. Don't enter with a limit arrow with a limit order at the demand zone. All right. So just a second. I'll just So how do you want to take a trade here is you see the flow is on the downside. This is the 5 minute supply. 1 or 2 supplies have been taken out. So now when you go on the 1 minute chart, all right, when you go on the 1 minute chart, you want to see that the previous 1 minute supplies are getting taken out here, right? So when they're getting taken out, this is where you want to enter. So given that they're not that far, so suppose what can happen is this can be the 1 minute supply. It can fall down to the demand zone like this, all right, and then pull back up. So don't enter a trade here because now it's far from the demand zone. What you want in this entire area is you want at least 2 or 3 swings, and this entire area should be traded properly. The logic behind this I cannot really explain on the public channel, but I'll just give you a little insight. What is happening here is, suppose there are a lot of buying orders placed here, right? So when the stock has already fallen this much, the supply here is less. All right. So when the buying orders come in, they get filled higher and higher, and that is how a V-shaped reversal happens. So when a V-shaped reversal happens, your goal is to buy near the demand zone. Your goal is not to buy here. All right. So that is, I'm talking, suppose you're an institution. So your goal is to buy around the demand zone. So when the V-shaped reversal happens, your average cost is way higher. That is when the stock will pull back from the previous supply, and you'll stop buying here, and then the build-up will happen, and then the actual breakout will happen when you've bought enough. So this is how the build-up happens. It's not just that, oh, liquidity trap, blah 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 blah, all that stuff. It's not that. All right. The build-up happens when at a proper demand zone around the previous base. You see, this is the previous supply. So the V-shaped reversal happens because orders are getting filled very fast on the higher side, selling is less, and then your average cost becomes somewhere here, but you wanted to buy here. So now it's coming down, and now you're buying on the way down and trading this up, right? So this is how the build-up happens. So right, so don't buy blindly when it comes to the demand zone, especially when the demand zone is tested 2 or 3 times. All right, so don't buy it if it comes here, right? Don't expect this. Wait for it to set up. Savhi IPO, yeah, all IPOs are falling, but they were bound to fall. The structure was very bad. Bombay dying, is it worth to buy? Is it worth buying Bombay dying? Yeah, probably not. All these structures, everything is breaking down right now. So probably stay out of the market. This was not the case in the last fall, actually. So all these extended structures are breaking down. So don't get in right now in any trades. All right. Fiber web. You should ignore it. See, 1 or 2 stocks are bound to go up. All right. Some stocks will always keep going up, but you should probably ignore it. Bank Nifty at supply, yeah, it's falling from that supply. Yeah. Let's see what happens. Burger King is not falling that much, all right. But see, again, this demand zone right here is tested now, so it's not falling because there was no demand. There was some demand here. Tested once, twice, thrice, and roll over. So this is also very bearish. I'm not saying this will break this demand, but don't buy here. This is very bearish. All right, Shiva Mills. See. All right. So whenever you're seeing a range like this, right, and this last supply is getting taken out, you want to buy at this demand zone. All right. If this supply is taken out, you want to buy around these lows. This is the proper area to buy these stocks, and you want to see how it's reacting to this supply. That is how the big move will happen. So there are 3 steps, basically 4 steps, which I've discussed multiple times on my lives. That first there will be a base, there will be an up move, right? So this is the breakout is the first step, all right, and then there is a top which is created, which is the second step, and then there is a pullback, all right. Now from the breakout demand of the base or the last up move, the pullback will react, all right. So when the pullback reacts here, it will encounter this supply, which is basically this entire thing is 3, and now to take out this supply, it will build a base here. All right, and this base is 4. That is when the big move will happen. So kindly keep this entire structure in mind. Just buying blindly at the demand zone doesn't mean anything. All right, it can go up till the next supply, come back down. So until this starts happening, the stock won't move like this. All right, so this is the entire thing which plays out. And you can go and research more about it, how to take an entry and all that stuff. But the basics of trend following is this, and this is what results into your higher highs and higher lows. This is your higher highs and higher lows. All right. Marico on weekly. All right, let's check out Marico on weekly. Marico on weekly, I'll buy if it comes here, which it probably wouldn't, but I'll not buy here. It's downtrending. SR Transfin for intraday. For intraday, what are you trying to do in intraday? Intraday short, there is no short here, guys. There is no short here. The base which led to this low is somewhere here, all right? So the supply inside the base is right here. So this is the short. I've explained this so many times, all right? This is just a momentum fall. You want to start recognizing shorts from right here. This is the supply. There is a little doji right here if you see. See, this is the supply, all right? This is the previous base from where the fall started. And this is where your short is, all right? Momentum will of course come below this. So you can chase the move now. So basically when this demand gets broken, you can short this as well. But there is no short here. International conveyors, all right. Let's take it out. I mean, it's very illiquid, it seems like. So cannot really talk about it, but your demand zone is here. No recommendations, but I'll just tell you where the demand is. Alchem Labs, yeah, keep this on watch. This is also on my watch. Keep this stock on watch. It is actually at the weekly 50 EM if I remember, yeah. So this is a very good demand zone. Entry level of IRCTC and RVNL, all right. So IRCTC, I've talked about this low right here. So let's see, this is the demand zone, right? This area right here. You can take the lower one as well. So, or maybe this one if you want to not miss out. So around, I would say around 780, somewhere around there, all right? Even if I take this doji as the demand zone, which doesn't really mean anything because this supply has not been taken out, this entire base. So even if I take this, still it's IRCTC is still extended, all right? So again, you see this demand got broken by this base, broke the demand, tested on the next day itself, started falling. Again, new low, base, started falling. Again, new low. This time the pullback was very weak, started falling. So this is how the trend continues. RVNL, let's see, RVNL. Yeah, RVNL, the entry level, the actual demand is this level. So every time it was coming down to these levels, it was buyable, but people were not buying this. So this is the proper demand level actually. So it's still very far. If you want to buy here, you'll have to wait for some sort of setup. Godrej Properties again down 10% today. So I've been talking about this for a long time. This is not the reality stock which you want to buy. This is the reality stock which you want to buy around these lows, not Godrej Properties. Or maybe some mid cap reality stocks because they're much better. Still falling. Let's see if it holds this base. It should hold this demand. Yeah, it should. So again, a very simple concept here. Look at this distribution. Couldn't take out the supply properly. Distribution. Exit your stock. This is bound to happen. This happens every single time. I've shown this so many times. Look at this. Look at this fall. Wick fall. All right. Wick fall. So this happens every time in the small cap index. It's not that hard, guys. Come on. Overall view, of Nifty. All right, overall view of Nifty. Let's check it out. Let's check it on the weekly time frame. So on the weekly time frame, Nifty reacted from this area of demand. All right. So when this supply got started to get taken out, you had a long. Now it's approaching an area of daily demand, which is somewhere here, which actually led to some kind of a break of structure. So from this level, actually, you can find some bounce intraday, or maybe 1 or 2 days. You can find some bounce here. All right. Right now, you wait for this zone, which is maybe here as well. 17,300, 17,250 is the area where you want to buy Nifty if you get an entry. Don't short this. All right. Let's see. Everything is falling. It's just till that time the small cap index will also come to this demand. So we can expect some bounce from there. All right. Index. Yeah, the index we discussed. Britannia. Whirlpool. All right. Whirlpool you bought at 1780. Looking at the weekly chart. First of all, what did you see in the weekly chart? I cannot see anything on the weekly chart, but I'm thinking you picked it up from somewhere here, demand zone maybe. I don't see anything on the weekly chart, so it's all right. It's not even falling anymore, so it's probably holding this demand. So we might see some kind of up move here, but be a bit careful because the last supply is here. It has tested out this supply, now it's on the downtrend again. So be a bit careful. Black Rose Industries. Nothing in Black Rose Industries again. It's negating this fall as well. So I think I discussed about this demand. It did give a spike up, but you don't want to do this 1 day spikes in the liquid stocks. So avoid this as well. All right, still going down. So this was the only trade which I'd taken when the index was extended, which was I'd bought somewhere here 220, yeah, and then my exit was as soon as the breakdown happened. Also because you see here again, so it's trying to go down. Manali Petrochemical for a long trade. Nothing here, nothing here. These are breaking demand zones. Look at this. So wait for them to test out these supplies. All right. Then there is an entry, right? Same thing again and again. Wait for them to test out these supplies. So you see Nifty IT has stopped falling. Bank Nifty was stronger anyway. So there is a quick drop below the previous day low. And now you can see some up move here as well. Even though the structure is still bearish, so it's not bearish, so it's not advisable to take a long. But things are fallen a lot. Nifty IT is improving, so we might see some bounce in the market from here on. So no shorts, please. Vinyl chemicals. Where should be the trailing SL? All right. First of all, why is it showing a gap up on this chart, but it's not showing a gap up here? I don't really get this, but the trailing SL should be below this demand. What is going on here? The trailing SL should be below this demand, all right. So Zlon right now, National Aluminium. All right, I'll check all the stocks one by one. Let's see. Jain irrigation we discussed in the last session. Until this demand is taken out, it's all right. You can hold it. Adani Power. Adani Power. All right. Adani Power, again, this is the demand. Actually, this is the demand area right here. This area is the demand. So you can look at some entries around 90. I had taken an entry here. I exited somewhere here itself, at this, around this supply. So you can take an entry if it comes down here, and if you get some sort of a bottom on the intraday chart. MMTC, MMTC is actually much stronger. So, but still, you see all this extended action. I will avoid this. Be very careful. Web of Global. All right, Web of Global. Keep this on watch. It's not exactly falling today. It's above the previous swing as well. So on the hourly, if you see, keep this on watch. Don't take an entry now because it's still downtrending on the hourly chart. What I discussed was you test out these supplies and then you go sideways. So instead of going sideways, it started falling again. So don't take an entry right now. I'm also watching this. This base is very strong. Cadila Healthcare, nothing in Cadila Healthcare. Why are you trading this? I've been telling you not to buy this since forever. So this was the previous base, the demand inside the base, which led to the last up move. All right, it sustained here for a while, but look, the last supply couldn't take it out, so now it's falling. Same pattern again and again. National Aluminium is back to this area, so now you can look for longs in National Aluminium. A very strong chart. Wait for some action to develop. All right, don't buy the dip itself. Can you re-explain the Nifty IT recovering? So Nifty IT, so why did I say that Nifty IT might go up from here is because after making a new low, it's trying to test out the previous supply. All right. So you see this action. You don't want to see this after making a new low. All right. We might see a straight spike till here. This is the supply which is getting absorbed. This one at the EMA. So you don't want to see this after making a new low. So now where this will get invalidated, where will this get invalidated? Once you see this is a new high. So if it takes out this demand, then you discard your view. All right. Because then it will turn into some kind of a top. So this is how you have to follow the structure. There is no perfect way. If it's showing you that it's trying to take the supply out, if you wait for the supply, see, the only problem here is you cannot wait for the supply to be taken out. All right, because if you wait for the supply to be taken out, you will go into some other supply very fast. All right, so you will have to assume that if it's spending time here, then it's trying to take out the supply. There is no other way. Or what you will miss out on, suppose you wait for the supply to be taken out. So what you will miss out on is something like this. It goes up, then it just keeps going up like this. So it's a trade-off. Either you take a small loss here when it breaks this demand, or you miss out on those big moves when it doesn't break, when it doesn't come for a retest. So this is the trade-off which there is no way around this trade-off. So let it come to the daily demand. Lux Industries, all right. Lux Industries, nothing. This is the demand zone. It's at the demand zone, which is a good sign. So we might you might see some bounce here. See, it's sustaining as well, not falling anymore with the index. So that is the reason. It's because of the daily demand zone. So you can see some longs here actually with a small size. The structure is still very much bullish. All right, more downside action. Let's see what happens. Almonds Global. Yeah, promoters are buying Almonds Global. You can keep this on watch. This is why it's not falling. Promoter stocks are always very strong. It's basically free money, but people want to do intraday, so do intraday. TV is missing Friday on. All right, so that is what I'm. All right, yeah, exactly. There is one day less in every stock, I think. Yeah. All right. Varun Beverages PSP projects actually is good. PSP projects is good. Varun Beverages, was the area of demand, so let it come. There is a little bit space which is left here. PSP projects actually there was good demand in PSP project. So the chart is good. It's trying to take out this weekly supply right here. So keep this on watch. All these levels are buyable. 460, 470. You can start buying it slowly. Actually, what happened to Godfrey Phillips? Keep a watch on this as well. This is also buyable at this level, 1070. All right, so um, that will be it for today. Hopefully, you guys learned something new. If you have any queries, ping me on Instagram, which is rishabh.tibrewal. I'll answer you there. All right, it's on my name itself. So you can ping me there, and I'll leave now. So the market view right now is, you see, we are approaching an area of daily demand, right? So what we might see from here on is, we might see a straight drop here and then a pullback. So don't buy this V-shaped reversal. All right, the last base in Nifty is formed here. So we might see a straight reaction till here, and then it will probably spend time somewhere here. So people who are good with option selling, you can probably expect some kind of a rest and a decay in the wicks, which will help you with the decay. But don't take longs directly if it comes down here. Wait for it to set up. All right, so I'll see you guys tomorrow at the same time.